Okay, here's how to structure a trade. I don't know why that entry was so like trade structure. I also have an example. I have an SMT, a lower time from SMT, which is absolutely perfect to show you guys. And you guys are going to learn a lot from this. So right here, let's just say we wanted to take longs because what? We had liquidity over here. Liquidity. Okay. Boom. And we have it here as well on ES. So watch this. See this right here? Do you see this, guys? What does this look like to you guys? Boom. Should we go in the higher time frame? No, like technically this is a little bit of a higher time frame SMT. And see, that's exactly why I didn't want to do that, because now I just, but I have a heart attack, bro. Oh no, did we lose it? Bro, I might actually like crash out if we did. What day is this? 21st. We lost it, bro, by so far too. Oh my God, bro. I'm about to lose my mind. April 21st, bro. This is why you never listen to not technical analysis. This is why you never listen to MFs who do quant analysis, liquidity. Look, okay, I'm not switching the time frame. Like right here, we're on the 15-minute here and the 5-minute on ES. We have boom, boom. Let's SMT because we have equal lows, and this is not equal. No, they have not been swept. They are unequal. Boom, SMT. But we're here to talk about how to structure a trade, correct? Okay, boom. Then let's talk about that. Let's hop on the. Oh no. Did I really? Words cannot express how much stress and anger I have to go through to be able to do this shit, bro. Okay, we have our SMT, our liquidity sweep. Boom. And then what is this? A fair value gap. What? Gets inversed. Boom. Those are our confluence. So let's go through our confluences one by one. We have a liquidity sweep. Liquidity gets swept on each pair. Okay, perfect. Then we have a lower time frame SMT. Again, amazing, perfect. We have equal prominent lows right here, and we have signs of bullish price action from this SMT holding towards the upside, right? And not taking these previous lows. Perfect. What else do we have? I actually gotta look this up. You know what? I don't know the name, so I've just decided to call it a super fair value gap. There's an official name for it, but I don't care. So as you can see here, we have an inverse fair value gap, right? If we were to mark it out right here, and it gets inverse. But if you wanted to wait for extra confirmation, we would wait for this SMT to hold, which it does. And then we have another fair value gap that kind of gets marked out right here. It's a little bit dirty because it does kind of show like, you know, up here and stuff like that. Like it doesn't, whatever. And you just kind of can throw it like this. I don't want to switch time frames. This is going to give me PTSD. Actually, no, I could just probably do, no. I call this a super fair value gap. There's a very specific name for it, I guess. Again, I'm not going to go and look for it, but you don't really need to know it. This is a way better example right here, actually. It's way more clean. Yeah, perfect. So we have an inverse fair value gap, right? It gets inversed. But then out of that, we have a fair value gap created. So if we, see, yeah, this is so perfect. See how like almost perfectly lines up? Perfect, boom. Then we have our SMT formed and then a closure above, okay? This is such like an A+ setup right here, and I'll break it down for you guys. First, liquidity sweep, okay? Meaning we want to be looking for longs now, okay? Second, we have our SMT beginning to form, but we don't know it's fully formed until 14:55, whatever, okay? Don't worry about the time. Time is tentative in trading. Then we have our fair value gap that gets inversed, right? You have like a super fair value gap, whatever you want to call it. Okay. And then we also have our structure broken up here, right? Some people do like to wait until the structure breaks fully, because there's like two types. There's like something called CISD, but I don't trade with that. I trade with break of structure. You do get a lower return ratio, but your win rate dramatically increases, which I value more. So yeah, we have our confluences right here. You know what? How about we just forget the super fair value gap for now? Just a little bit of a confusing topic for newer traders. Inverse fair value gap. Let's keep it so simple. But you can see how they overlap. You get it. And then we take our entry either on ES or NQ, whichever one you trade. I personally trade NQ right here. Set our stops either below the confluence or below the previous lows, and we target internal liquidity. Why do we target internal liquidity? Because if we were to watch this, technically we could have targeted way up here and caught a much better trade, whatever. But you don't know that it's going to do that. All we're looking for here are reversals, okay? So there's something called swings and reversals, okay? So if we're looking for a swing reversal, this is a swing, right? Because if we were to go in the high time frame, we can see that structure literally broke in the high time frame. If we were to draw it out from here, right? I can't even. So BOS, breakout structure. Okay, we were to see that it enters the uptrend. But we don't know that this is going to turn into a swing reversal. What we're hoping for, actually right here, is for price to take this internal liquidity and then continue going down. Because on the high time frame, we are in a downtrend. That is called narrative and daily bias. I'm going to get into that in the next video. So I'm keeping this one very, very short. This is just how to kind of structure a trade and put everything that I taught you together. But how do you know which way you want to go, either long or short? That's where you need to learn daily bias and narrative. We're going to get into that in the next video, which I'm going to be ending this one right now. I hope that was simple for you guys. Thank you. Good.